capital flow driven growth and foreign purchases of financial assets can persist for an extended period of time if it's paired with actual economic activity that is commensurate with those capital flows and asset pricing. And similarly, borrowing can occur, and you can have a buildup of borrowing for an extended period of time, no problem, as long as you plausibly can create the income necessary to service that debt over time. And I think the challenge that we have, that we're seeing, really the turn in the last 6 months or so, is that people are really starting to question, particularly foreigners are starting to question whether the US can actually make good on all of that capital flow that has come in and bid up asset prices, US asset prices. And that's really the question is, when you had a circumstance, and I was writing about this a fair amount last summer, where you looked at the projections that were happening in terms of US stocks or the AI trade, let's say. And it was basically suggesting that we were going to have something like a doubling of corporate margins over the course of a 10-year time frame to meet the expectations that were getting priced into those assets. You look at that and you say, I mean, could it happen? Of course, anything could happen. But that seemed like a pretty implausible outcome that was going to happen. Similarly, you started to look at, I think foreigners in particular started to look at US government borrowing in particular, and basically said, not necessarily can the US government make good on its debts. The US government can make good on its debts. And anyone who says the US government's going to default is a loony, right? That's just doomerish stuff. Because of course, you can always print the money in order to service the debts. The real question is, are you going to get a good real return on your bonds over time? And particularly, are you going to get a good real return in your own currency on your bonds? And that's one which, again, also people started to raise questions about whether, at these debt levels and the incentives and prioritization of the US government, is it going to make sense that you're going to get a good real return?